Hello everybody. Today is Sunday, September the 28th, 2014. My name is Michael Wright and this is the video for the week ahead. Just before pushing forward, please do pause the recording and read over our risk disclaimer. Alright, today's video will be on the Ichimoku Kinko Hyo. Yesterday we spoke about the Elliott waves. We took a look at price action from an Elliott wave standpoint, and then today we're gonna take a look at price action from an Ichimoku Kinko Hyo standpoint. For those not familiar with the technical analysis of this, basically is a Japanese style model, and it's really good in terms of eyeing and keeping tap for trends. Alright, so with that being said, let's dive right into the swing of things. Here we have the euro dollar. Here we have the euro dollar on the daily time frame. You can see prices really, after it broke the cloud, it really started to trend lower. This always bodes well, and then when you're looking at the Ichimoku, you're also looking at the future cloud. The thicker it is, the more of a trend it develops. So for those who like to look at and hold on to trades, this will definitely benefit you, as indeed your stocks may be wider, but you will be holding a position for quite some time, looking at weeks to even months at a time. And once prices cross, once the Tenkin crosses below the Kijun, it does signal further downside on that level. Alright, so again, euro dollar downside, for those looking for a potential switch and reversal, I would definitely change the time frame first, right? Because price action relates to time, and if you are looking for a trend switch, 129 above there will be that first indication of which possibly get long. But even before that, we will look for a Tenkin Kijun crossover to the top side. All right. Those who have done our coaching know that we also do follow the hourly bullish Tenkin Kijun crossover for longs. There is a strategy behind that, so those coaching members are well aware of that. And if you are interested in our coaching, all you have to do is go to our website, click on the coaching tab, and we will get back to you after you fill out the application. But in any case, though, above 129 is first indication. 129 will also be a test of the Kijun, but then from there, I don't rule out a consolidation between the two, with that crossover happening later for confirmation to the top side, and then eyeing 133, which is the bottom side of the daily cloud for the euro dollar. Looking at its counterpart, right, from a correlation standpoint, we have the British pound, the pound dollar. Similar action here. This is still a short setup in my opinion. We need to get a break above 163.55 on the daily time frame, but meanwhile on the 4 hour, you need to get above 163.80, and when I say above, I mean a 4 hour close above that top side, which will also be a breakout of the price action. Very important and good to always mix the two, the technical development as well as the Ichimoku, because the more confirmation you have, the better. Right, now we looked at the euro dollar on the 4 hour, but let's also look at the dollar Swiss, because obviously the dollar Swiss is the inverse. All right, we did a Elliott wave outlook. It is posted in the members area, so members, I would say, even though that outlook was done a couple of days ago, it's still on track. So definitely do sign into the members area and watch that video again, as you can see how prices really started to relate there as it broke out of that triangle. But similar action with the euro, we look for the dollar Swiss to break below 93.60, which would be a 4 hour cloud, but then we look for a test of 91.50 first. After that, don't rule out a comeback test after the future cloud turns bearish, and then a breakout. That breakout below 91.50 I would love to take. I may take the short side move if price action does get below 93.80, 93.50, breaking both the cloud and trendline support, and then eyeing 91.50. Alright, so in the LDA video, we spoke mostly on the yen. Here we spoke so far about the euro dollar, the pound dollar, and the dollar Swiss. One or two more pairs I want to take a look at are the commodity currencies, right? The Aussie dollar and the Kiwi dollar, as both have been really southbound, right? Southbound prices just continue to fall, but with trading, obviously, there's some fluctuations that ideally happens. Now, from the Kiwi standpoint, strictly looking at the Ichimoku Kinko Hyo, we need a bounce, right? We don't need it, but we look for a bounce. 4 hour, we do have a 4 hour strategy. Again, those coaching students are well aware of that. Let's wait for the Kiwi to get above the cloud. Until then, further downside should not be ruled out. Okay? Same thing for the Aussie. Need to get above 89.50. Until then, it's further downside. So if you're looking to bottom pick it, you are not looking to trade it from Ichimoku Kinko Hyo, as everything is signaling for further losses. So what you do is that you continue to ride the train, and every test of the trend line, you'll look to sell it until it makes a 4 hour close above the trend line first. Then we can start to look for longs, and then start to look for gauges, right? One gauge other than the trend line is the Tenkan Kijun crossover. You can see here when it crossed over to the downside how it really started to sell off. Okay, another downside cross. So this really works. So here, wait for price action. We ride it. We know if the Tenkan crosses above the Kijun, we are on the right plan, and then we look for the next move above the cloud. But that's why we go to break even, and we have the risk management skills that we have. Alright, so let's stop there. I want to thank you all for watching the Ichimoku Kinko Hyo for the week ahead. If you have any questions, do not hesitate to Skype us at wtcg.mike, or you can email us at info@globalfxclub.com or trade@rightinv.com. Cheers, everyone, and good luck trading.